Hi, this is Kevin Brocious, and don't let expert advice put a dent in your portfolio. Stock market prognosticators are very good at making money by publishing books and newsletters purporting to be able to predict the future direction of the stock market. But do their track records justify their income? As they say, hindsight is 20/20, and looking back is always easier than predicting the future. But that is the only way you can determine if the expert advice you are paying for is any good. Recently, a friend wanted to give me a must-read book titled The Demographic Cliff, written by Harry Dent. I passed on the opportunity. Dent is Harvard educated and has written a lot of books in the past. He also has a newsletter and a couple of mutual funds named after him. Although Dent is good at selling books and newsletters, the problem is he isn't so good at predicting the stock market, which is what people are paying him to do. And if you took his advice, or worse yet, invested in the Dent mutual funds, you would have been shockingly disappointed. In 2011, Dent published The Great Crash Ahead: Strategies for a World Turned Upside Down. In the book, Dent suggested that equities would fall between 50 and 75% in 2013 or 2014. His recommended strategy was to be out of the market or perhaps even short the market. In a description of the book, Dent self-proclaimed himself uncannily accurate in predicting the future. Unfortunately for him, the market returned more than 40% over that same period. And if you missed this market upside, or worse yet, shorted the market, it would have turned your world upside down. A look back at Dent's other work can be revealing. In 1998, Dent authored a book titled The Roaring 2000s, in which he predicted a Dow that could go as high as 35,000 over the next decade. The market actually lost 1% over this 10-year period. However, undaunted by this missed prediction, Dent penned the next great bubble boom in 2006, in which he predicted the greatest stock market boom in history. 18 months after the publication, the U.S. markets lost more than 50% over just a 9-month period. Again, undisturbed by these failures, in 2009, Dent wrote The Great Depression Ahead, in which he predicted a Dow of 3,800 by the end of 2010. The Dow closed 2010 at 11,600. Believe it or not, some readers of Dent's books were so impressed by his insights that they also invested in his mutual funds. Perhaps eating his own cooking, the Dent mutual funds didn't fare very well either. In 2012, the Dent Tactical ETF, Exchange Traded Fund, DENT, at least he put his own name on it, closed because of poor performance. This followed the demise of another Dent fund, the AIM Dent Demographic Trends Fund, which performed poorly and was ultimately folded into another mutual fund. However, this didn't deter Dent from continuing his prognostications. In December 2016, he predicted the Dow Jones Industrial Average would crash 17,000 points. Then reversed that prediction just 10 days later and predicted a strong market ahead. Most recently, Dent advised his clients to buy precious metals, gold, silver, or whatever you can get your hands on. Harry Dent isn't the only one providing investors advice that is of little or no value. There are plenty of books and newsletters that are being sold daily by people with an uncanny market insight that will tell us whether the market will go up, down, stay the same over the next day, month, year, or decade. For those that continue to believe Dent or others can predict the future of the stock market and are willing to pay for their advice, Einstein famously said that the definition of insanity was doing the same thing over and over again and expecting a different result. This is Kevin Brocious. Thanks for tuning in.